So here is the FOMC rate hike explained in just 5 minutes. What's going on, team? It's Ricky here with Technical Solutions, and we live streamed the Federal Reserve FOMC rate hike today, and we caught the market's reaction. Initially, when the 0.25% interest rate hike, I just want to make sure that you guys could see that right here. So the federal funds rate, again, is now anywhere from 4.5 to 4.75%. There is a 0.25% interest rate hike. Again, that was the change that we've seen. This is the smallest interest rate hike dating back to March 17th, 2022. One of the first things that I want you to understand is that this is what was already factored into the market. If this interest rate hike came in at 0.5%, anything higher than 0.25%, the market would have aggressively sold off. It would have corrected itself. Market pulled back originally, right? This was all caught in today's live. And then it actually began to just take off. Jerome Powell began to speak. And again, we did this yesterday where we looked back to or the previous 6 FOMC rate hikes, and we tried to see how the market reacted. Normally, sometimes the day of, it wasn't very common, but the market did close in the green. It was not very common, right? This is a little bit different because inflation is actually coming down, and this was a less aggressive interest rate hike. With that being said, normally after a rate hike, the market would close in the red. This time it closed in the green. There has been 2 other times that the market did close in the green, but it was the days after that it corrected itself. I wanted to share with you guys an analogy that a lot of traders like to use, and it's kind of like the rubber band approach or the slingshot approach. The more that something becomes overbought and the less it corrects itself, right? The more overbought it becomes, the quicker and the harder it will fall, right? There's no reason I need to be telling you this, right? I do not care if you actually sell your position. I'm not here to force you to do something that you do not want to. If you want to continue to hold your position, please, you're an adult, right? You can do as you please. All I don't want to happen is, if I can make this video, to simply encourage you to have some form of exit plan if we do begin to see a correction and or a pullback, right? A pullback isn't just something, pulling back to the EMA or pulling back to the moving average. It's not what I'm talking about. But one of the main reasons that I focus so much on locking in profits, again, I made a little bit over 5,700. I left myself with my 1 lucky share. And just so you could see my SQQQ position, I only have my 1 lucky share that I had from 2 days ago when I was shorting the market, and I made 24K, right? I locked in profits 2 days ago, and then I went long yesterday. I made over $6,000. And then today I made a little bit over 5,700. So I'm very grateful for the money I made today, but realistically, based off of TQQQ's performance at 6.46% and then 2.91%, I mean, we're talking about an over 8 to almost 9% move. My profits were not anything impressive. I had a very light position size. I locked in profits right away, but I wanted to lead by example, right? I didn't want to be a hypocrite and be like, hey, I think everyone should play it safe, and then I don't, right? You just need to understand the conditions that you are trading in. This is the reason I'm making this video. Is I wanted to recap what the interest rate hike was. I wanted to explain to you what exactly happened, but I also wanted you to understand why I chose to play it so safe. I think that's what's most important, is the why behind it, the psychology behind it. Anytime that there is a rate hike, anytime that there's an earnings report, anytime that there's any form of economic report, these are catalysts that can cause more volatility, which means more risk. Any open position is a position that's open to risk. It's very easy for me to say now, looking back, of like, hey, I should have just held my position. But again, thinking about it, how many times have you held your position and then you go from green to red? It's one of the worst feelings. Ending in the green, although I could have made more money, this is a pill that I can swallow, right? This is a obstacle that I can learn to overcome and get better as time goes on. I could have let my winner run a little bit longer, or left myself a smaller position as there was no break of pattern. But nonetheless, the habit of locking in profits is a better habit to have than not locking in profits. And that's what I'm trying to remind you, is that build healthy habits. There's no time. There's no need to try to be perfect. You will never be perfect. Your entries and your exits will never be perfect. If you obsess about being perfect, you will get destroyed by the market. Just be effective. That's what you should always aim to be with your entries and with your exits. Stay calculated. One of the main reasons that we began to take off after market hours, you could see that originally the market, based off of TQQQ's performance, again, NASDAQ market pulled on back right before close, 2.66%. If you think about it, that's pretty significant, right? Why did it begin to take off? Well, if you look at actually Meta's earnings, Meta reported earnings today and it gapped up 20%, one of the biggest gap ups that we've seen in Meta in a really, really long time. Of course, Meta having a $400 billion market cap, this is the reminder that I have for you on how an individual stock can move indexes. There's three main indexes in the United States: NASDAQ, Dow Jones, and S&P 500. Do you guys know what tomorrow is? Tomorrow is the biggest tech earnings for the week. And we have Amazon, Apple, and Google. I don't know if you've heard of them before. We got Alphabet, which is the mother company for Google, right? We have Amazon reporting earnings. Where's that at? AMZN reporting earnings after the market closes. $1 trillion market cap, more than twice as much as Meta today. And then we have Apple. If I'm not mistaken, Apple reports earnings tomorrow as well. And again, Apple has one of the largest market caps for any company that's publicly traded. Let me just double check and make sure that it does report earnings. I'm pretty sure it does report earnings tomorrow. But the reason I'm reminding you of this is because you can see how it can shift markets. Looking at the overall NASDAQ, there's two things that I wanted to share with you. I wanted to remind you, right? Or I wanted to make you aware of what caused the market to go up today. But I also wanted to remind you of what's to come, right? We have economic reports tomorrow, right before the market opens. So if you guys aren't aware of that, we have initial claims, continuing claims. That's based off of unemployment. The people that are filing for unemployment for the first time, based off of last month, this should be going down. And continuing claims, meaning people that continue to file for unemployment. Those are going to be the two main economic reports that's going to be released. And then obviously earnings tomorrow. Again, something that you definitely want to take into consideration. Why? Well, because it can affect the market. And by affecting individual stocks, depending on their market cap valuation, it could influence other areas. And because QQQ is so based off of recent patterns overbought, it wouldn't take much to bring it down. Remember the slingshot approach. The more that it becomes overbought, the quicker it can fall, especially, again, it's just a domino effect, especially if things just begin to tumble. Right now, there's great market sentiment. We're coming off of a great interest rate hike. Market sentiment is strong. I'm going to take it day by day. But as we become this overbought, I just want to remind you, you shouldn't be scared. Just this is a reminder that we are overbought and to watch and be mindful of your position size. That is all. Right? Because at one moment, if it's not tomorrow, then it's next week. The market will correct itself to some degree. I just want you to be able to tolerate it. Remember, this is a marathon, not a sprint. You don't have to make it or break it every single day. You're learning how to trade. Focus on learning to build healthy habits. That's what's most important. That's what's going to allow you to be here in a year, or 3 years or 5 years from now, is if you do not destroy and discourage yourself by trying to be too aggressive or by trying to be too perfect. It's such a toxic way to approach the market. You're here to learn, then focus on learning and building healthy habits. So that's my recap for the overall day. If you guys have any questions, you guys know exactly how to reach out to me. Friendly reminder. Again, I do trade live and only live with my Learn Plan Profit team every morning at market open. Today, some of you guys got a taste of what it's like to see me trade live. If you would like to join my team, again, we're running our biggest sale. It's $150 off. It's a one-time payment, lifetime access. You get access to our beginner-friendly A to Z video lesson library, our daily live trading sessions that starts right at market open, our private group chat, and access to the TechBuds HQ. A very simple question to ask yourself: would it be of value for you to be able to wake up every morning and to be able to watch me trade live? See my entries, see my exits, hear my thought process, green days or red days, it doesn't matter. You're there, I'm there. And the whole idea is to condense the time that it will take for you to learn what it takes to be successful in the market. And that's exactly what we try to focus on every single day. So if you're ready to join my team, second link down below, biggest discount, and I'll see you tomorrow at market open. Other than that, again, you know how to reach out to me. First and third link, send me a direct message either via Discord or via Instagram. And don't forget, in just 2 days on February 3rd, is going to be the last day to enter our Apple Watch Ultra giveaway. And if you want to learn more about that, that's the fourth link in the description. You need to enter before February 3rd. And again, I'm using the Webull trading application. So if you want to use this same application that I'm using, it's free, it's commission free, and available to everyone in the US. If you use my link, you will earn up to 12 free shares when signing up, and I earn 1 free share. So it's a win-win for both of us. I really do appreciate you guys' time. I hope that you guys enjoyed this video. I'd be more than happy to host a live stream tomorrow for the up and coming earning reports for Apple, Meta, and Google. I'm sorry, not Meta, Amazon, Apple, and Google. And that's going to be tomorrow after the market closes. All you have to do is smash that like button, get this video to over 1,500 likes, and make sure you subscribe and turn on your post notifications. I appreciate your time. Like always, let's make sure that we end the year on a green note. Take it easy, team.